Dear friend, have you ever sat at your desk, opened your trading platform, and told yourself you'll only take 1 or 2 trades today? Hours later, you look back and realize you've placed 10, maybe even 15. This is the silent trap of overtrading, and it happens to almost every beginner at some point. The real danger is not just the money you lose, it's the psychological damage it creates. Overtrading makes you feel like you're in control, but in reality, you're being controlled by impatience, fear, and the craving for action. Markets are addictive. The flashing charts, the red and green candles, the thrill of pressing buy and sell. It feels like a casino in disguise. And just like gambling, the more you play, the more likely you are to lose. Mark Douglas explained, "The consistency you seek is in your mind, not in the markets." Consistency is impossible when your mind is addicted to action. That's why overtrading is not a strategy problem. It's a psychology problem. Dear friend, start building the trader's mindset today, because until you master your impulses, no technical system can save you. Every time you take a trade, win or lose, your brain releases dopamine, the same chemical that fuels social media scrolling and gambling addiction. Beginners unconsciously chase this dopamine hit, mistaking activity for productivity. You think you're working hard, but in reality, you're just feeding your brain's craving for stimulation. This is why you keep clicking even when your plan says stop. Professionals recognize this trap. They know that more trades don't mean more profits. In fact, it often means the opposite. A pro might sit for hours without taking a single position, waiting patiently for a high probability setup. Beginners cannot bear that silence. It feels like wasted time, but that silence is where real profits are born. As Warren Buffett famously said, the stock market is a device for transferring money from the impatient to the patient. Overtrading is simply impatience in disguise. If you don't rewire your brain, you'll keep chasing dopamine instead of discipline. Another reason beginners overtrade is fear of missing out. FOMO. You see a stock rising, you panic. What if it keeps going? I'll miss it. So you jump in late, only to watch it reverse. Then you chase another, and another, until your account bleeds. FOMO is not about the market. It's about your emotions. The pain of watching others profit feels worse than the pain of losing your own money. So you jump without thinking. Professionals flip this mindset. They remind themselves daily, opportunities are infinite, but my capital is finite. Missing one trade is irrelevant. Protecting your money is everything. Paul Tudor Jones once said, "Don't focus on making money. Focus on protecting what you have." Pros protect by waiting for their edge, while beginners destroy by chasing every can. Overtrading isn't just about too many trades. It's about trading from fear, not from logic. Once you reset this frame, you stop feeling left behind and start feeling in control. Imagine this. You take a losing trade, frustration builds, and your brain screams, "Get it back now." You double your size on the next position, hoping to erase the pain. Instead, you lose again, and the spiral deepens. This is not trading. It's revenge gambling. Professionals break this cycle by enforcing hard rules. They set maximum daily loss limits, and if that line is crossed, they stop. Beginners ignore this because emotions overpower logic, but pros know that revenge trading is poison. Alexander Elder explained, "The market does not know you exist. You can do nothing to influence it. You can only control yourself. That's the key. The market doesn't care about your pain, your need to recover, or your feelings. Only discipline saves you." Overtrading after losses is the fastest way to blow up your account. Resetting your mindset means learning to stop when your emotions want to speed up. This is a dangerous lie. Every trade is independent. The market doesn't remember your last win or your last loss. Professionals embrace uncertainty. They know they can't control outcomes, only their behavior. That's why pros may take just 1 or 2 trades in a day and still finish profitable, while beginners take 20 and end the day broke. George Soros once said, "It's not whether you're right or wrong, but how much money you make when you're right and how much you lose when you're wrong." Overtrading ignores this wisdom by pretending that volume equals control. It doesn't. Resetting your mindset means realizing that more trades don't mean more control. Discipline. Dear friend, start building the trader's mindset today. Subscribe now and learn how to replace the illusion of control with the reality of discipline. The first real step to stopping overtrading is awareness. You cannot fix what you cannot see. Most beginners don't even realize when they cross the line. They start with 1 or 2 trades, then chase a breakout, then add a revenge entry, and before they know it, they've executed 10 trades in a day. The reset begins when you track your behavior. Professional traders use journals not just for trades, but for thoughts. They write down the reasons they entered, what they felt during the trade, and how they exited. Over time, the journal reveals patterns, impulsive clicks, emotional triggers, or FOMO entry. This awareness turns unconscious mistakes into conscious data. Think of it like turning on the lights in a dark room. Suddenly you see where the traps are. Mark Douglas said, "Until you accept the risk, you will be obsessed with avoiding it." Journaling forces you to accept the truth of your behavior. Without awareness, overtrading feels invisible. With awareness, it becomes a choice. The mindset reset begins not on the chart, but on the page, when you confront yourself honestly. After awareness comes structure. Beginners think discipline is about willpower. I'll just control myself next time. But when emotions spike, willpower collapses. Professionals don't rely on feelings. They rely on rules. They create strict boundaries, maximum number of trades per day, maximum percentage of capital risked, maximum drawdown allowed. These boundaries are like guardrails on a highway. They keep you on track when speed and adrenaline threaten to push you off. For example, a pro might say, "I'll only take 3 trades per day. If I hit my limit, I stop." This simple rule prevents overtrading before it begins. It feels boring, but boring is profitable. George Soros once said, "It's not whether you're right or wrong, but how much you make when you're right and how much you lose when you're wrong." Rules ensure that when you are wrong, you don't destroy your account by chasing. Beginners without rules treat every trade as random chance. Pros with rules treat trading like a business. Structure is not restriction, it is freedom, because it protects you from yourself. The next step of the reset is learning to embrace stillness. Overtrading is the enemy of patience, and patience is the weapon of professionals. Beginners believe that sitting out means missing opportunities, but pros know that not trading is often the most profitable decision. Stillness creates space for clarity. Imagine a beginner who trades 10 times in a day, burning energy and money. At the same time, a pro might wait all day for just one high probability setup, executing it calmly and walking away with profit. Who wins? The patient one. Warren Buffett's wisdom applies here. The stock market is designed to transfer money from the impatient to the patient. Stillness is not laziness, it's strategy. Professionals train this through rituals like meditation, walking away from screens, or setting alerts instead of staring endlessly. By practicing stillness, they rewire their brain from chasing dopamine to seeking discipline. Overtrading thrives in noise. Trading mastery thrives in silence. Another critical tool to stop overtrading is setting pre-commitments. Beginners often rely on deciding in the moment. "I'll stop if I feel like it." But in the heat of trading, emotions hijack logic. Professionals outsmart this by making decisions before they enter the market. They predefine everything: entry, stop loss, take profit, number of trades, and risk per trade. Once these rules are in place, they don't negotiate with emotions. It's like a pilot's checklist. Follow it, no matter what. Paul Tudor Jones said, "The most important rule of trading is to play great defense, not great offense." Defense comes from pre-commitments. Without them, every red candle feels like a crisis, and every green candle feels like an opportunity to gamble. With them, each trade becomes just another step in a long series. Pre-commitments transform chaos into calm. Beginners are tossed around by emotions. Professionals anchor themselves with rules made in advance. Beginners try to recover confidence by trading more. "If I just win one big trade, I'll feel better." This is the gambler's trap. Professionals do the opposite. After a tough day or week, they scale down. They reduce size, trade less frequently, and focus only on their highest quality setup. This allows them to string together small, controlled wins that rebuild trust in their process. It's like an athlete returning from injury. He doesn't jump straight into the championship. He rebuilds strength step by step. Alexander Elder said, "The goal of a successful trader is to make the best trades. Money is secondary. Confidence comes from following the process, not chasing results." Dear friend, start building the trader's mindset today. Subscribe now and learn how to trade less, earn more, and master consistency instead of chaos. Overtrading destroys confidence. Discipline rebuilds it. The deepest reset comes when you detach your identity from your trade. Beginners unknowingly tie self-worth to outcomes. A winning day means I'm smart. A losing day means I'm stupid. This emotional roller coaster fuels overtrading because you keep clicking to prove yourself right, not to follow your edge. Professionals, however, understand that trading is not a test of intelligence. It's a test of consistency. One trade does not define you. It's simply a data point in a series of hundreds. When you stop seeing your identity in each outcome, you free yourself from the urge to overtrade, just to repair your ego. Ray Dalio once said, "If you don't look back at yourself and think, wow, how stupid I was a year ago, then you must not have learned much." This wisdom highlights that growth comes from embracing mistakes, not hiding from them. Overtrading is ego-driven. Mastery is ego-free. Imagine two traders losing money. One spirals, clicking again and again to prove he's not a loser, while the other calmly records the loss in his journal, knowing he is still a disciplined trader. Which one survives long-term? The one who separates identity from out. Another powerful weapon against overtrading is patience. And patience is not passive, it's active discipline. Beginners see a quiet market and panic. Nothing's happening, I'm wasting time. So they force trades. Professionals do the opposite. They know that not trading is sometimes the most profitable move. Patience is the ability to wait for setups that meet your rules, not your emotions. Warren Buffett captured this perfectly. The stock market is a device for transferring money from the impatient to the patient. When you overtrade, you're essentially paying rent to the patient traders who wait for you to make mistakes. Think of fishing. A beginner thrashes the water with his net, scaring away the fish. A pro drops one line, waits quietly, and reels in the catch. Patience means knowing that opportunities are infinite, but your capital is finite. Each click you waste now is one less bullet when the real target appears. Overtrading is impulse. Patience is power. The mindset reset happens when you take pride not in how many trades you take, but in how many bad trades you avoid. At the core of preventing overtrading lies discipline. And discipline is not about trying harder. It's about building systems so strong that emotions cannot break them. Beginners think they'll just be careful next time. But when charts move fast, fear and greed take over. Professionals never rely on willpower in the moment. They rely on preset rules. A pro knows his maximum trades, risk per trade, and daily loss limits before the day starts. He doesn't debate mid-session. The system makes the decision for him. This transforms trading from an emotional battle into a structured business. Paul Tudor Jones said it best: "The most important rule of trading is to play great defense, not great offense." Defense is discipline. It protects both your money and your mind. Imagine two traders. One keeps clicking because this might be the one, while the other stops at his preset limit, even when tempted. One burns out, the other survives. Overtrading is a symptom of no discipline. Resetting your mindset means turning discipline into your shield, not your bird. True mastery over overtrading is achieved when you build confidence from process, not outcomes. Beginners believe confidence comes from winning streaks. They feel invincible after 3 wins, and crushed after 1 loss, so they overtrade to protect or rebuild their fragile ego. Professionals are different. Their confidence comes from knowing they can follow their plan, even under pressure. Imagine losing 3 trades in a row, and still feeling calm because you know you executed your system perfectly. That's professional confidence. Alexander Elder once said, "The goal of a successful trader is to make the best trades. Money is secondary. Overtrading is what happens when you chase money instead of good trades." Professionals don't need constant wins to feel secure. They need consistency and execution. This type of confidence compounds like interest. Every disciplined day makes the next day easier. Overtrading fades when you no longer crave validation from constant action. Instead, you trust your process so deeply that stillness feels like strength. Confidence built on process is steel, unshakable, unbreakable, and immune to overtrading. Dear friend, here's the truth. Overtrading is not about charts, strategies, or indicators. It's about psychology. It's about impatience, dopamine, fear of missing out, and the illusion of control. That's why so many beginners fail. They think the solution is a new system, when in reality the solution is a new mindset. Professionals win not because they trade more, but because they trade less, with discipline, patience, and clarity. Overtrading is chaos. Trading mastery is calm. Mark Douglas reminded us, "You don't need to know what will happen next to make money. You only need the mindset to follow your edge, and stop when emotions push you to gamble." The market will always tempt you with flashing opportunities, but your power lies in restraint. Dear friend, Start building the trader's mindset today. Subscribe now and join a community where traders learn to reset, rebuild, and rise above overtrading. Your future as a disciplined trader doesn't start with your next trade, it starts with your next decision. Will you choose chaos, or will you choose control?